Good day. Ira Epstein of Linn Associates with your financial market wrap-up. And this is for the end of the month, end of the day on Thursday. And this is the 30th of April, 2020. Tomorrow's May Day, so interesting. First day of May, that is. So we'll be looking to see what that does. To see the market down today, I don't know if it's a surprise. You know, you get a lot of bookend squaring and everything. Earnings coming out all over the place. And we're seeing that in the stock market, like Gilead, they had a good number. Amgen's having good numbers. Now we'll see what Amazon is. I don't know the number just yet. In the metal markets, this was one of the wildest days I recall in a long time. I mean, silver, for no reason, had a $1.07 range. That's huge. Copper market, 6 cents. That's another big range. You were almost $50 in the gold market. Not quite certain what went on there. I don't see anything on the news wires, but it acts like a lot of position squaring at month end. Dollar index a bit lower at the expense of which market? The euro going up as the market likes what it saw out of Miss Lagarde today as she discussed what the European Central Bank's going to do. I wrote a whole report on it this morning for everyone. Then we come over and we see that we're continuing with that rally on the energy markets, bonds and notes, real rates going up. But again, a pretty wild day here in the ranges as you take a look at them. So I'm fascinated by what went on there. All right. So as we look at the market, this morning I had drawn this line, and that's where the market was when I drew it. This is where the market's going to finish. I always like to do that right on the last day of a month, get a feel for where the market was in the morning to the afternoon, and that's pretty much what it's done. We had a good month, though, because as we take a look at a weekly chart, we're still up for the week. Now we have one more day left, 2.41%, but the month looked good. When I come over and look at the chart here, you can see where the market is stalled out. It's stalled out right now as the market is playing around in the neighborhood of the 62% correction. It's still at a zone where traders are still asking themselves, are we going back to these lows or have we abandoned those thoughts? When we take a look at the swing line, the trend is up. Higher lows, higher highs. We filter it by looking at next the 18-day average of closes. Prices are over that, so that part gives the market the bias up, and it says that the swing line is for real. The next thing I look at are the Bollinger Bands. It's my belief that the first time you go to a Bollinger Band, and then you correct, and that would be a first time again, the market runs into a brick wall. There's a difference between hitting it and running against it. And I talk about it when we get to different patterns, so just stay tuned and you'll see me talk about that. But right now, if the market were to break, just based on this, you still have support, 27.97. Why? Because that number is over the last break low of 27.85 and a quarter. What about momentum? It is right here, and the numbers are still over 80. So both numbers remain embedded. Now, if the red number falls under 80 and closes there, then I say that price and the 18-day average are ready to make a run at each other. Haven't done that yet, therefore the market still gets bought, in my opinion, by the pros. When we come over to the Nasdaq, here too, you made your first real run since back here in the early month to the upper Bollinger Band, and it reversed again from there. For those of you that get my morning subscriber video, could I have been any clearer today when I was saying it's time to clear the decks? And that was early on in the morning, and that turned out to not be such bad advice as the market made lows as the day went on. Same thing in the Dow. The first challenge of it, that's what I say. And that's the advantage of the morning subscriber video versus these. It's as the action is happening, and I'm able to say things that I want to say for trade purposes. I'm reviewing here, but the first challenge of a Bollinger Band, in my charting course, I teach that is where I expect to see traders come out of the market. I am assuming if it's on the upside, they're long. If the market's going down, I'm assuming they're short because of bias, up or down. In the Russell, you hit it yesterday and you backed off today. And this market, what about the momentum? It's about to turn down again. The market was just getting interesting. Let me come to yesterday. Both numbers over 80 the day before and the day before. Now, what the market did today, because we settled again with both over 80, you embedded. But when you're just hanging in there and you're settling near the low of a day, it's a signal that come the opening, and that could be at 5 tonight, the odds favor the market's going to lose that embedded status unless there's a reason for it to just immediately jump. So these are the things that you watch with the nature of what that indicator does. In the VIX, one of the things I came out today and was telling traders, this was the first challenge of a lower Bollinger Band. In the past, when you were down in the range back here, when we were trading between 10 and 15, one of the patterns that I noticed was that the pros seemed to have been selling puts when the market would hit the lower band and selling calls when it hit the other one. Now, we know that that pattern blew up on their face right here, but there's ways to handle that as well. So this was the first time all the way back, folks. You've got to go back into February since the market hit the lower band. And I don't know if it's going to work or not. It's not a trade recommendation. But what I told them is it'll be interesting to see if that philosophy, that pattern shows itself again. And we'll see. The 18-day average would be the objective. In the T-bond market, as I told you this week, I now think we're in what we call chop city. And that means that you're just bouncing along. You get a signal you're bullish, it doesn't follow through. You get a bearish, it doesn't follow through. And I think you're caught between these bands and the 18-day average of closes. I see the identical pattern in the 10-year and the 5-year note, just so you know. As for the dollar, you went down today to 98.83, hit the lower Bollinger Band. What would I tell you? I would say that's where I think the pros will take money off the table. You are now knocking on the door of getting oversold. In fact, you are oversold with the 29 reading. So I think that the market taking money out here, resistance back up at 99.90, but I don't think the pros step back in. You either embed or you get rid of the oversold condition. In the eurocurrency, not quite overbought. I would not be surprised to hit the upper Bollinger Band and see the market have a lot of resistance right there. Support in the market back at the 18-day average, 108.84.5. When we come to the Japanese yen, the first challenge of the Bollinger Band, complete failure. The market down from those highs of 9,400 plus back down to 93.34 right now with the low today of 93.07. So almost a 100-point drop in the market since that occurred. Bitcoin's trying to break out. So it's staying over the band. You won't stay over it more than 5% of the time, but it's pushing the upper band out, which gives it room on the pullback to have that band further away. So that's part of the breakout mechanism. It would be a real strong market if it pulls down, just gets to the right-hand side, doesn't take out the previous lows. As I said, this is the month where they're going to start halving the amounts of Bitcoin that can be produced, and that supply being removed from the market a little bit friendly. In the energies, I noticed that a lot of the clearing firms, I know ours, raised margins on some of the front-end months of the crude oil, 150% over the exchange. So they're not going to see that happen again. In other words, nobody wants to be around as the next delivery comes up. That's why I'm looking at the Julys. And as you can see, you're correcting a bit. You're back to 469. When we take a look at where the market is, if you look at today's rally at 26.98, it took out 26.95. So the swing line said that this level of the downtrend has come to an end and that the market has now got a pattern of higher lows, higher highs. So the swing line's up. It's not with the filter given a green light because the bias is down and you're turning momentum up. But there's plenty of reasons not to be short right there. As we step over to the WTI, not quite the same pattern. When we look at this market, first thing I look at is what's going on with the slow stochastics, because I see both numbers are under 20. Both numbers yesterday, under 20, the day before, under 20, not the day before, so the market embedded. Now, if it loses that status, then I'm going to look for price in the 18-day average to come together. Until it's lost, I'm assuming the pros are still selling this market. They'll defend the position until that's lost. Where the market finished with it, I'd be very cautious tonight. Why? If the market lifts because you're near the high of the day and it just barely embedded, it can come out of it very quickly. So keep your eye on that 1, 2, 3. In the gasoline, the upside target was hit today. This is how the market looked. You came in with higher lows, higher highs. And as I said, the risk factor was very large here, even though it doesn't look it, it's 600 points, and that's a lot of money in this market. But the targets, the upper Bollinger Bands, you're in one of these pipes, as I call it. You can see that there. You hit the band today. Got through it by 27 points, 30 points, right in that range, and then backed off from it. So that's logical as I see it. You're in overbought territory. Bias up, people coming out, more and more cities allowing everything to go. Atlanta now, I think tomorrow is the full opening of the city. There'll be restrictions as to how many people can be in stores and the like, but they're letting the people out. We'll see how that goes, 1, 2, 3. But more people are going to be driving, and that's what you look at. As for the nat gas market, we had a draw today that was right in line with the estimates of 70 billion cubic feet. The market went down, challenged again the 100 and the 18-day average, and turned away again from that. So we have a pattern that's still in place that I talked about. The lower highs, now you're trying to get these higher lows that are all from back here. And it's very difficult as the market's coming in at itself to see just what the next play is going to be. You know, I talk to you all the time about what we do. Well, at Linn, we cover a lot of markets. I cover in my reports, my personal morning subscriber video, all these markets, and I cover them in a certain sequence each morning. My subscribers, I know time can be important, especially when we all go back to work. So we put a slide bar on the bottom, and you just pull the slide bar, and as you pull the slide bar, it lights up and it tells you where you're at. Plus, there's a lexicon over here that you can always click on the website. When you have this just on your application on your phone, you can't quite do that. You have to move around with the slide bar, but it won't light up. It's just how the technology of it works. But what you'll see is in the morning, I'm not only prepping you, I'm very specific. I want you to sell. I want you to buy. Here's what I want you to do. And the reason that you hear it that way from me is this is all about chart patterns. So I'm trying to tell you what I think the chart pattern is so that you help yourself with your own ideas. I don't want to guide your money. Let's start there. I want to be your mentor for charting. And that's the difference. There is a difference between the two. So if you'd like to try the service, all you need to do is go to our website. Under the word research, you'll see that we've now got our, not only this one posted, but my Spider ETF video. If you're trading those, you might want to take a look there. With that, I'm Ira Epstein. You have a good day. I'll see you in May. Take care.